Welcome back, traders. This is our weekly gold market review. Gold managed to jump to a 2-month high price on Monday as investors actively participated in the precious metal market. We say this as silver's price was also higher, while at the same time palladium reached a new multi-year high price. Through this report, we will attempt to clarify the reasons behind gold's recent rise and overview the most important fundamentals driving its market. A look into the upcoming economic events will also be provided, while at the end, our technical analysis will assist us with the price activity and identifying important levels. Overall, we aim to provide simple and useful information. Focusing first on the US economy and the US dollar. Updates from the US Fed Chairman Jerome Powell on Monday could have provided further insights on how and why the market reacts in certain ways. The Fed chair assured the US economy is reopening, bringing stronger economic activity and job creation. Yet, he also made reference to what is happening at street level, and some adverse circumstances were noted at that point. So the US economy still has a long way to go for full recovery. Yet, most of the surge of the precious metal on Monday was during the early US session when some economic data was released. Specifically, the ISM manufacturing PMI for April and the market manufacturing PMI figures were released. Gold gained approximately $15 during the time of the releases. On the other hand, during the past Friday, other improved economic data was also released. The US consumption adjusted figure for March and the University of Michigan Consumer Sentiment final reading for April confirmed Americans feel much more confident to spend currently. Moreover, personal income in the US jumped to the staggering 21.1% on Friday, which is a record monthly increase. Some important figures in the US have characterized the economic recovery as red hot, backed by the extensive fiscal stimulus programs carried out by the government. As a result of the continuous progress of the US economy, Moody's revised the real GDP forecast growth rate for the current year to 6.4%. In our view, however, all the information pre-mentioned forces us to make further assumptions on inflation levels and where they could be in the short term or during the next half of the year. In the past, traders have used gold as a measure to counter inflation. Traders can hedge inflation that could lift risks in other financial activities by turning to gold. During the next days, a busy week ahead can provide the necessary circumstances for traders to place trades or stay out of the market accordingly. On the 5th of May, we get the ADP national employment for April, the market services and composite PMI final reading for April, and the ISM non-manufacturing PMI for April. On the 6th of May, we get the weekly initial jobless claims figure, and on the 7th of May, we get the star of the week, which is the US employment report for April, to be released in the US session. This will be a good test for the progress of the US economy in the past month, and caution is advised, as upon the release we might see the market reacting extensively depending on the outcome. Moving now to our technical analysis, please note this is gold's daily chart. Gold ascended and attempted the R1 1800 resistance level but failed to clearly reach it. However, the R1 1800 level is a very considerable level for traders, not only due to the fact that it's a round number, but also because it was tested various times in April, but the bulls retreated eventually. This is also a sign that it is a major challenge for the buyers, while a move higher than that can send the yellow metal to the R2 1820 hurdle. At the top, we have placed the R3 1840 resistance level, which was last seen in February. In the opposite direction, and from a selling perspective, the first level possibly found lower is the S1 1770 support line. Lower than that, the S2 1755 hurdle that was tested in the past week is also imminent. At the bottom, the S3 1730 is our lowest level for this report and can be a target in an extensive selling environment for gold. At the moment, the RSI indicator below our chart has moved higher but remains below the 70 level, showing signs of some bullish interest being present. That's the end of this report. We hope you enjoyed it as well as found it useful. If you like this video, please feel free to share and subscribe. Thank you very much for your time, and until the very next time, please enjoy solid trading.